What is going on, Future Focus Nation? My name is George and I talk about investing on this channel. And today I wanted to talk to you about ARK Invest's latest ETF, their Space Exploration Exchange Traded Fund, ticker symbol ARKX. Now, first we're going to go through what it is, then we're going to go through the holdings inside of the ETF, and then finally I'm going to replace 4 of those companies inside that ETF with 4 companies that I would have preferred to see inside this ETF. With all that said, let's get right into it. This ETF seeks to provide exposure to companies involved in space-related businesses like reusable rockets, satellites, drones, and other orbital and suborbital aircrafts. These innovations should transform logistics, observation, agriculture, telecom, drones, and may even put humans on Mars. Their investment focuses in reusable rockets, orbital aerospace, suborbital aerospace, aerial drones, 3D printing, and enabling technology. This is the overview of the ETF. It's active equity. It has the typical number of holdings will be between 30 and 50. Its inception was in August of 2018. Kathy Wood is the portfolio manager, and Sam Curris and Tisha Keeney are the analysts behind it. Now, the ARK Space Exploration and Innovation ETF, their description and objective. The ARK Space Exploration and Innovation Fund is a long-term growth of capital. ARK-X is an actively managed exchange-traded fund that will invest under normal circumstances primarily at least 80% of its assets in domestic and foreign equity securities of companies that are engaged in the fund investments theme of space exploration and innovation. The advisor defines exploration as leading, enabling, or benefiting from technologically enabled products and or services that occur beyond the surface of the Earth. They go on to explain what these are. So orbital aerospace companies are companies that launch, make, service, or operate platforms in the orbital space, including satellites and launch vehicles. Suborbital aerospace companies are companies that launch, make, service, or operate platforms in the suborbital space, but do not reach a velocity needed to remain in orbit around the planet. Enabling technology companies are companies that are developed technologies used by space exploration-related companies for successful value-added aerospace operations. These operations include artificial intelligence, robotics, 3D printing, materials, and energy storage. And aerospace beneficiary companies are companies whose operations stand to benefit from aerospace activities, including agriculture, internet access, global positioning system, GPS, construction, imaging, drones, air taxis, and electrical aviation vehicles. Out of the 4 different types of companies that they're placing inside this ETF, the beneficiaries was one that I did not agree with. The reason I didn't agree with it is that is too vague. Too many companies are going to be beneficiaries of space exploration and innovation. 2 of the companies that they placed inside this was Netflix and Deere. Instead of seeing these companies in there that are already in a lot of ETFs, I would have liked to see more companies that have a direct impact on space innovation and exploration. One thing you should always look at when you're investing inside of the ETF is what you're going to be paying for it. So this is the expense ratio, which is 0.75%. This is on the higher end of typical ETF costs. For context, Vanguard's VOO ETF that mirrors the S&P 500 has an expense ratio of 0.3%. Now let's take a look at their holdings. Their largest holding is Trimble Inc., and this has the highest weighted average of 8.47. They have 70,000 shares of this one. They have the 3D printing ETF, which is an ETF inside of an ETF. They have Kratos Defense and Security, L3 Harris Technologies, JD.com, which is a Chinese company. They have Lockheed Martin, Iridium Communications, Thales, which is an Australian company. I've actually worked with this company in Australia, so this is a good company to have in here. Boeing is another good company. NVIDIA is going to provide chips for them being out here, so I can see why they're in here. Spirit Aerosystems, Deere, I already mentioned that this would be one of the companies that replaced. Amazon, I don't think they're going to have Blue Origin inside of Amazon. It'll probably be a spin-off company if it ever goes public, so I don't think that company should be on here. Alphabet, I can live with it or not live with it. Teradyne, Teledyne, Dassault, Garmin, Virgin Galactic obviously needs to be in here. Raven Industries, Airbus, Alibaba Group, AeroVironment, Elbit, Netflix, Heiko, Honeywell, Workhorse, Taiwan Semiconductor, Tencent Holdings, Synopsys, Ansys, Autodesk, Meituan, Reinvent, and Atlas Crest Investment. So as you can see, they currently have 38 holdings right now. So you saw what stocks they had inside their ETF. Now I'm going to give you 4 stocks that I would have preferred to see in there. The first company I would take away from this ETF is Netflix, because again, not that Netflix is a bad company. I just think that being a beneficiary is way too vague. Let's take a look at that first company. The company I would replace Netflix with is Maxar Technologies. Maxar is an actual company that has 4 different sectors in outer space. They're improving life on Earth from space. So Maxar's industry solutions serve dozens of industries worldwide, from environmental monitoring and mapping to defense and public safety. So they have Earth observation. They have contracts with over 50 governments, civil government. They have defense and intelligence. They have contracts with the US government. Accuracy matters when your application is centered around location-based search features. The world's most innovative technology and mapping companies partner with Maxar for current, clear, and accurate Earth imagery and derived data. If you've ever used Google Earth, the company that Google Earth hires is Maxar Technologies. Maxar Technologies are the ones that get you all the way down to the ground so you can see, what's going on in the street and get that real clear picture. Maxar Technology provides that. Here's their purpose. The promise of space is to ensure everyone on the planet has access to the technology and information that makes the world a better place. At Maxar, they are committed to creating the connections and intelligence for a better world. Maxar also has something called the Maxar Constellation. With unrivaled accuracy, agility, collection capacity, our high-resolution constellation offers customers around the globe affordable access to the highest quality view of the world. You can see how things change over time. Millions of square kilometers of imagery are available from our retired satellites, serving as a digital time machine that allows customers to see change through an archive that goes back more than 200 years. They offer space infrastructure, advanced capabilities that connect Earth and space. More than 60 years of mission success. With more than 60 years of experience, Maxar remains a trusted partner for government and commercial missions. From world-class satellites and spacecraft systems to nimble robotics and innovative payloads, we develop the infrastructure and technology to power humanity's reach beyond Earth. We provide advanced, reliable, and affordable spacecraft for a broad range of civil, defense, and intelligence missions. To date, more than 280 Maxar-built satellites have served over 2,200 cumulative on-orbit years. So as you can see, this company is actually doing what the ETF is trying to do. They're doing space and exploration. They're supporting in many different facets. They have 4 parts of their company that are all in the same realm that this ETF is trying to explore. So here we have the chart for Maxar Technologies, ticker symbol MAXR. The current price is 36.61, and here we're looking at the yearly. So as you can see by the 1-year chart, a year ago, the stock was at $10.04, and it made it all the way up to $58.94 before, all the companies have been down lately. So this company has fallen all the way back down to 36.61. Looking at the 5-year chart, you can see that this company back in 2018 was in the $70 price range. And I think since then, all they've done is get better. Back here in 2019, they had some bad news and they didn't recover as fast as a lot of the other companies did during that time frame. But since then, they've had nothing but good news and contracts and things like that. And I see the stock going up. I have currently an $80 price target on this company in the next 2 years. The next company I would remove is Deere, and the company I would replace them with is, let's get into it. Now, Park Aerospace Corporation develops and manufactures solution and hot melt advanced composite materials used to produce composite structures for the global aerospace market. As a complement to Park's advanced composite materials offering, Park designs and fabricates composite parts, structures, and assembles and low volume tooling for the aerospace industry. Park's objective is to do what others are either unwilling or unable to do. When nobody else wants to do it because it is too difficult, too small, or too annoying, sign us up. So they're in aerospace. Look at that. Advanced composite materials designed for primary and secondary structures and assemblies and low volume tooling. So this company has a global manufacturing and supply chain management experience with 50 plus years. They have advanced composite materials that are available in a variety of product forms, including broad goods, unidirectional tapes, bias tapes, and molding compounds. They have Park advanced composite materials that can be produced with a number of reinforcements, including fiberglass, carbon, aramid, spectra, carbonized rayon, and silica. A broad range of resin chemistries are available, including epoxy, polyester, and phenolic resins. So what are the use cases for this? Well, Park's aerospace advanced composite materials are used to produce primary and secondary structures for jet engines, large transport aircraft, regional transport aircraft, military aircraft, unmanned aerial vehicles, business jets and general aviation aircraft, rotary wing aircraft, and other specialized aerospace applications. But wait, there's more. Park Aerospace also offers specialty ablative materials for rocket motors and nozzles, specialty design materials for random applications. For those dividend collectors, Park's cash dividend has paid 36 consecutive years of uninterrupted regular quarterly cash dividends without ever skipping a dividend or reducing the dividend amount. Park has paid $542 million or $26.45 per share in cash dividends since the beginning of FY 2005. So the top 5 customers in alphabetical order from the previous quarter were AAE Aerospace, Aerojet Rocketdyne, which was going to be one of the companies I listed in this list, but Lockheed Martin has purchased this company, or at least that's what's reported. GKN PLC, Kratos Defense and Security Solutions, and Middle River Aerostructure Systems, MRAS. Here we have the one-year chart for Park Aerospace Corporation, ticker symbol PKE. As you can see, the current price is $13.41, and in the last year, they've hit a high of $15.50, so they're not too far from the low. If we take a closer look at the one-month chart, you can see that the company's been on a decline, which whenever you're purchasing a company, that's when you want to purchase it, when it's far from the highs. So if they were to add this inside the ETF, they would not be buying it at all-time highs like some of the other companies that they placed inside the ETF. The next company I'd remove from this list is Amazon.com. The company I would replace Amazon with is Howmet Aerospace. They're a company of innovators and makers. They are transforming the future of flying and driving with high-performance engineered solutions that are paired with advanced manufacturing expertise. As you can see here, they're in 4 different segments, and with over 70% of that revenue in the aerospace end market. They're global leaders in all of these 4 segments, which we already talked about, are the engine products, fastening systems, engineered structures, and forged wheels. They have best-in-class capabilities of jet engines. They're also the sole provider for the highest temperature engines in Joint Strike Fighters. Here we have the one-year chart for Howmet Aerospace, ticker symbol HWM. The current price is $31.76. As you can see, it's been a steady rise up. As we take a closer look at it until the one-month chart, you can see that support and resistance can be found around the $31.76 range. The next level down that I can see for this stock, if it keeps going down, will be around $31.76. However, when you compare this chart to a lot of the other charts out there right now in the growth sector, a lot of them don't look like this. A lot of them look like an upside down V. I think right here around the $29.56, you could find some good support. It's hit it multiple times and it's stayed above it. And finally, the last company I'd remove from this list is Google, Alphabet. Although I can see that Google will be a beneficiary, I don't think that they will be directly into all these things, especially if the government comes and breaks up Google as their intention is right now. I would rather have a company in there that's a pure play. Without further ado, let's get into it. The final company I have on this list is Raytheon Technologies. Now, Raytheon Technologies is in a few different sectors and they all revolve around what this ETF is trying to accomplish. So Raytheon is the future of aerospace and defense. They don't predict the future, they create it. What does that mean to create the future? At Raytheon Technologies, it means taking risks and accelerating ideas to solve some of the world's biggest challenges. It means the brightest, most innovative minds working from a unique vantage point that spans the full spectrum of aviation, space, and defense. Together, we form an unrivaled company. Across our businesses, nearly 180,000 engineers, researchers, and visionaries come together to push the limits of known science and redefine how we connect and protect our world. Together, we are advancing aviation, building smarter defense systems, and creating innovation to take us deeper into space. That is the future of aerospace and defense. Now, these are the core businesses that fall under Raytheon. You have Collins Aerospace, Pratt & Whitney, Raytheon Intelligence and Space, and Raytheon Missile and Defense. And all these segments have their own customer base. So for example, here you have Collins Aerospace, Aerospace Redefined. So Collins Aerospace, what do they do? At Collins Aerospace, they are working side by side with customers to unleash the exciting possibilities we see before us. With a comprehensive portfolio, extensive capabilities, and broad expertise, they're crafting intelligent solutions to meet demands of rapidly evolving global market, all representing the best innovation and technologies from the industries they serve. They have commercial aviation, business aviation, military and defense. They have helicopters, space. A new age of space flight has dawned and we are at the forefront. Using our decades of experience in systems design and production for spacecraft, we are leveraging unmatched capabilities to help ensure successful missions. So as you can see, they're well diversified within their own portfolio. Here we have the 1-year chart for Raytheon Technologies. As you can see, their price is currently $77.82. As you can see, another well-looking chart. You can see that it dipped back on 27 October. It hit a low of 51.97. Right now, I would find support and resistance here around the $65 range, although it hasn't been struggling as much as other companies have been struggling during this time frame. The next level of support and resistance will be right around here on the $76.65 range. If it dips below that, I'd be looking down here at the $74.77 range. But again, it hasn't been performing poorly like a lot of these other stocks have. It looks like it's in a bit of consolidation here. I can see the next leg being up, but I wouldn't say it's going to go straight up. So there you have it. I gave you 4 companies that I would have preferred to see inside this ETF. But what do you think? What do you think about the companies that I chose to put in there? Or maybe you have some other companies that you would have preferred to put in there. Let me know. Let me know in the comments below. I'd love to hear it. I hope you enjoyed the video. I hope you enjoyed content like this. And if you do, please like that video below. As always, invest in me. Press that like button, invest in yourself, and smash that subscribe button. Until next time.